A lot of investors think that index funds are the smartest way to build wealth, and others swear mutual funds are the answer because they're professionally managed. But what if I told you that both of these can still limit your growth and hit you with surprise taxes and fees the same way that, the internet gets rickrolled out of nowhere? Today I'm going to be showing you how separately managed accounts, SMAs, flip the whole story. My name is Jason Vasquez, the wealth strategist and wrapping wealth advisor, and I help people invest smarter with strategies built around control, taxes, and long-term planning. So let's break down why SMAs outperform index funds and mutual funds and why the data backs it up. When I started working with investors, the same two things kept coming up. Jason, I'm in index funds because they're cheap, or Jason, I'm in mutual funds because they're managed by professionals. Both of them sound great on the surface. But of course, once you look under the hood, it was obvious. Taxes weren't optimized, emotional decisions were hurting returns, and investors had no control over what was happening inside their portfolios. And meanwhile, clients that were using separately managed accounts paired with advisor guidance were staying disciplined, reducing tax drag, and building portfolios that were tailored to their goals. Not because SMAs are glamorous, but because SMAs give you control and strategy the other options simply don't. And before we dive in, just hit that like button somewhere there, comment, and subscribe because soon I'm going to be dropping my SMA remix of Never Gonna Give You Up. And it might be the first time getting rickrolled actually improves your retirement plan. Alright, so let's get into the first pillar, which is behavior. Now, behavior matters more than most investors realize. Vanguard's Advisors Alpha research found that working with an advisor can add an extra 3% in net returns annually, mostly by preventing emotionally and poorly timed decisions. Now, how SMAs beat index funds here is with index funds, you're on your own. If fear kicks in during a downturn, or fear of missing out kicks in and during a rally, there's nothing stopping emotional moves. Now, the way that SMAs beat mutual funds here is that mutual fund managers manage the fund, not your personal decisions. So they can't stop you from panic selling or mismatching risk. SMAs offer personalized guidance that improves actual investor outcomes, not just theoretical fund returns. Now, of course, some people are going to say,
Jason, I don't panic. I'm disciplined. I don't need behavioral coaching.
And I hear that a lot, which brings up something closely related, which is dollar cost averaging, or DCA. Now, of course, dollar cost averaging is great at keeping investors consistent. It takes the pressure off timing the market. It calms people's nerves, but here's a twist that most people don't know. If you already have a lump sum, dollar cost averaging actually underperforms investing all at once about 2/3 of the time, according to Vanguard. And why is that? Because markets rise more than they fall. And with dollar cost averaging, you end up sitting in cash while the market moves forward. So dollar cost averaging protects emotions, not returns. Now here's how separately managed accounts improve on dollar cost averaging. Separately managed accounts add discipline without the drag. Strategic entry, opportunistic buying, tax loss harvesting, automatic rebalancing. You get all the behavioral benefits without slowing down your compounding. Now, Dalbar's QAIB study proves that investors consistently underperform the market by several percentage points annually because of emotional timing mistakes. Now, index funds can't fix that. Mutual funds can't fix that. SMAs with advisor oversight do. Now, where SMAs completely separate themselves, when it comes to SMAs versus index funds are tax-friendly, but not tax-optimized. So what you're not able to do is harvest losses at the individual stock level, control capital gains distributions, or even choose when taxable events happen. Morningstar found tax loss harvesting can actually improve after-tax returns by 1 to 2% per year. Now, when it comes to SMAs versus mutual funds create more tax drag. So you inherit gains created by other investors, and you owe taxes even if the fund goes down, and you never control timing. Morningstar's Mind the Gap study shows mutual fund investors consistently lose returns to taxes and poor timing. SMAs, they eliminate inherited gains and put tax strategy back on your hands. And of course I hear,
but index funds are cheap, and mutual funds are professionally managed. Isn't that enough?
And of course, the other thing that I hear is that,
Jason, that sounds good, but what about the 1% advisory fee? Isn't that worse than a low-fee index fund?
all right, so here's the thing. Number one, Vanguard shows advisors add 3% net in value annually. That's a net positive return even after paying the fee. Now with Vanguard Advisors Alpha, the value comes from behavior coaching, tax optimization, rebalancing, withdrawal strategy, and even personalized allocation. Now, number two is that mutual funds often cost more while underperforming. Now, SPIVA, S-P-I-V-A, shows over 85% of US mutual funds underperform their benchmarks over long periods of time. Now, in addition to that, many of them also have expense ratios of 0.75% to 1.5%, 12b1 fees, front-end sales loads of 3% to 5.75%, and tax drag of 1% or more. Now, number three is that index funds hide the biggest fee of all, which is behavioral loss. Now, Dalbar actually shows emotional decisions cost investors 3 to 4% in lost return annually. So when people ask, why would I pay 1%? The real question is, how much are you paying in hidden losses by not having strategy? Low fees don't outweigh poor tax outcomes. Expert managers don't protect you from inherited gains. Index funds lack control and mutual funds lack tax efficiency. SMAs actually solve both. When it comes to SMAs and index funds give you the entire market, even when parts of the market don't fit your goals or risk tolerance. Now, what these SMAs do let you do is overweight your convictions and underweight your risk, as well as remove problematic holdings and align everything with your timeline and objectives. And of course, when it comes to SMAs versus mutual funds, mutual fund managers optimize for the fund, not for you. SMAs, they build around you, your tax bracket, your volatility tolerance, your retirement timeline, your income needs. It's not the market's portfolio, it's your portfolio. Now, of course, some people are going to say,
but customization doesn't guarantee higher returns, right?
Customization isn't about beating the market every quarter. It's about optimizing returns for your actual life. Now, SMAs, they reduce tax drag, behavioral drag, risk mismatches, and that's what compounds wealth over decades. Now, here's the big picture. Index funds are simple. Mutual funds are familiar, but neither gives you behavioral discipline, tax strategy, customization, transparent fees, direct ownership, and control. SMAs give you all of it, and that's why affluent investors have relied on them for decades. Now, if this helped, hit the like button there, comment your takeaway, and subscribe, and check out the description for tools and education to take your investing to the next level. And now, a quick preview of my SMA remix of Never Gonna Give You Up, which I actually retitled to Adjust the Game. Because unlike index funds and mutual funds, SMAs will never let your strategy down, never run around and desert your goals. Check it out.
They play it safe, we don't. They stay still, we flow. They sell hope, we move. When it shift, they choke. One size not bespoke. Blind game, we see ghosts. Same storm, we steer boats. Adjust the game, they broke. I don't pitch products, I architect wins. You read from the deck, hope they don't look in. We talk long term, vanish when the storms begin. I stay seated, adjusting while the floor cave in. You paid on the buy, paid when they leave. Paid off the churn, not the outcome they need. I earn my keep when the pressure increase. You hide behind terms that they don't read. You sell the same suit in a different size. I tailor the cut, let the margins decide. You freeze when emotions divide. I slow the room down, reset the stride. You count commissions, I count who I protect. You chase volume, I checkmate the set. Different license, much different deaths. When results talk back, you ain't got nothing left. They play it safe, we don't. They stay still, we flow. They sell hope, we move. When it shift, they choke. One size not bespoke. Blind game, we see ghosts. Same storm, we steer boats. Adjust the game, they broke. You speak in averages, safe from the fall. I deal with real lives when the headlines crawl. You post one chart, call that a call. I get the call when confidence stall. You say hold on like that, heal fear. I read the room when the pain get near. You worship the mean, ignore the tail risk here. Manage the edge when you disappear. You sell simple, never stay blind. I cut exposure, redefine the line. You don't see the tax drag eating time. I keep what's earned while you optimize. You walk theory, I walk consequence. You win debates, but I earn permanence. Same market, but way different lens. You teach the crowd, I defend the fence. They play it safe, we don't. They stay still, we flow. They sell hope, we move. When it shift, they choke. One size not bespoke. Blind game, we see ghosts. Same storm, we steer boats. Adjust the game, they broke. I don't argue lanes, I build exits. You stuck explaining why it still fits. I move discreet precision investments. You loud online, no adjustments. I don't need slogans, I read behavior. Pressure reveal who really saviors. You fold with the cycle, blame the paper. I rewrite outcomes with less favor. Mutuals box, index confined. I stay adaptive by design. When the game shift, you fall behind. I already moved, you still decide. This ain't hype, this is proof with calm. Years in the seat, not a thread or a blog. Use uncertainty, I deliver resolve. Debate's over, check the score, it's logged. They play it safe, we don't. They stay still, we flow. They sell hope, we move. When it shift, they choke. One size not bespoke. Blind game, we see ghosts. Same storm, we steer boats. Adjust the game, they broke.
Never gonna play it safe. Never let the average win. Never let the blunder guys control you. Never gonna sell a myth. Never push a one-size fit. I adjust the game while they fall through.
They play it safe, we don't. They stay still, we flow. They sell hope, we move. When it shift, they choke. One size not bespoke.